High conviction and belief in your strategy. That's what I'm going to talk a little bit about in trading tactics today. Hi, my name is Richard Lee. I manage the stockradar.com.au website. We use a unique high conviction strategy to focus on stocks with a high probability of going up. It's that simple. 3 market questions for you. Is uncertainty creating demand for the banks? Will the current rally now be challenged as it moves into resistance in the ASX 200? Is a 10% correction enough? Okay, now we've hit that level about 73.55, which has been really the high for the current rally, the short-term rally. We've got resistance all the way up to about 76.30. Above there will signal a resumption of the uptrend. So there's plenty of work to do in that zone, okay? So we're not out of the woods yet. We've had a rally, we've had a pullback. Now we've got to see what's going to happen from here. Sometimes being neutral has its benefits in times of uncertainty. What are they? Firstly, no exposure, risk-free, comforting, relaxed. Cashed up, ready to pounce again. That's good. If a potential trend doesn't develop, you get out, which is what we've done, okay? Don't give back. Be sure as you can and shoot hard when you get them, okay? So there's not many of them, but we are shooting hard for the ones we've got. Okay, so conviction capitalises on trends and defends during downtrends, and that's what I'm all about, okay? The hardest is a market that drops suddenly, as COVID did. But the recovery, which always happens, was amazingly fruitful, to say the least. Not everyone got onto it because there's a lot of fear around, but that's often when you're going to be the good buyer. So some did, some didn't. The inevitable trade-off. Markets come down, they will go up. Markets go up, they will come down. All the time this is happening. Rotating. So we're just trying to jump on those upswings, get out on those downswings. Okay. In the downward markets, like the current slide off the August high, we'll normally hold our own by exiting falling stocks and holding trending stocks. There are some out there: Computershare, National Storage, S32, NAB, Beach Petroleum, Origin, Whitehaven, Woodside. They're all doing quite well, and some of you have got those, and some of you have got those in your portfolio. The large percentage of our current stock pick count, that's quite a few in the stock pick count of 22, all those stocks I just mentioned. Be patient, respect the markets during flat, non-trending periods. They will come back. You just have to bide your time and be patient. Okay, so that's what I'm going to go through today. Focus, take aim, and shoot hard is what we're going to do. Believe in your stocks. Okay. Format, conviction and belief in trading tactics. The normal thing, I give a bit of background, the overseas markets. I go through the ASX 200 and some stocks. Then I look at some trading tactics. A little bit of a tip about the markets as to how you can do it. I believe is the focus today, because you must believe sometimes and have faith in what you do, because the markets always behave in the same way. Okay, and they scare you sometimes and they make you reckless sometimes, so it's a bit difficult to know what to do, but trying to keep that poise and behaviour the same is what we always try and do. So, firstly I'm going to go into the markets. Okay, let's have a look at the Dow. Dow Jones is relatively, we've got it coming off a little bit here. We've actually got lower highs and lower lows at the moment. We're pressuring the support level at the moment, which has held, but our lows are getting lower, so the bias is down at the moment, okay? And we've also got quite solid and heavy volume throughout this period, okay? And our momentum has really gone out of the market on this big push-up since the early 2020 after the COVID crash. Okay, so as I said before, the COVID crash really looks a little bit insignificant compared to that now. So this is what always happens with the markets. Okay, so the Dow Jones is going to come off at the moment. It's looking a bit weak. We just have to wait and see what's going to happen there. NASDAQ probably looks a bit worse, as we know. It's broken support, heavy volume again. Momentum's really weak. Buyers are trying it on here at the moment, but we've got a lot of work to do to start breaking any resistance. We've got resistance all the way up to R1 on this, so there's plenty of work to be done. Okay, let's get into gold, commodities. Firstly, I've got a few ticks and crosses here for you today. The reason why is gold is a bit of an interesting one. It's not performing that well, and we're talking about inflation occurring. Gold's not really doing all that much, hasn't done anything for over a year. But if we look at the 4 things we use: price, moving average, volume, and momentum. Let's just take a look at what we've got. Okay, firstly, we've got, the market compared to the moving average is actually turning up at last, okay, so that's a tick. Volume is reasonably bullish. We've got green bars here, not extremely bullish, but I would give it a small tick, okay, and momentum is quite positive, and that gets a big tick. However, we still don't have price confirmation, which is the major one I really need to tick off if anything's going to happen. So for gold, for me at the moment, things that might be ready on the down part here, but it really, as the price goes, it's not going up, so we hold our fire. This is a very important pivot point here for us to signal that gold is going to go up. And our gold stock's a little bit mixed at the moment. Okay, crude. Well, it's been a runner for sure, as we know, but it's got a bit volatile between these areas here. The old high there back in October 2018 and this recent high up here. The resistance up around 140. It's trading between the two. We've got some reasonable volume here. Momentum's still good. So the bias is still to the upside, although volatility is there. Okay. Copper, the next one. It's really rotating in this range. It tried to break, it failed. You know, there is a little bit of bias on the up. The moving average is pointing up a little bit. There's a bit of volume here. Momentum's okay, but still again, a bit like gold. We did have a break, but it came back and a bit of volume there. So we're not out of the woods yet. It's sort of hovering there, sort of waiting. But this level here is the key to signal another move higher in copper. So it's been pretty well supported here. So we'll wait and see what happens with that. Okay, now what I want to do is go into the ASX 200 for you and check that out. Okay, so we can see here, firstly, I just want to point to you right down here, there's really nothing on the momentum side. All the upside momentum has gone out. Okay, it was fine up to here, but from this August high, we've seen it decline considerably. Okay, so now let's have a look at the chart here, a bit of a close look at it. Because we have had a rally and it's significant, it's important, we view what's happening realistically. Okay, so really we've got this rally which has come off from the 10% correction level. It's rallied quite strongly. It is going to be off a little bit today because it has hit around this area here. It's got through the moving average, but we've got all this resistance from about this 7,330 level right up to the 7,600 level, 630, 50. And there's the downtrend, these two highs here. There's a lot of work to be done on this one here. So we're not too sure. So we're just sort of saying pretty neutral. The rally is being challenged. We've had a 10% correction. What's ahead? Again, it's an uncertain thing, so we're happy to be in this situation. I talked about being neutral before and the benefits of it. We'll just wait and see. We may well have another further correction yet. I don't know. It may well go up. I don't really know. So we'll just have to wait and see and let the market tell us. The market presents us with opportunities, and that's how we play it. Until it does, we stay stumm. You know, I'm a specific stock trader, so I look at this on a specific stock basis. There are a few stocks going up, which we're holding, not a lot. Okay, so the ASX 200 is... If it creates another lower high here, that's perhaps not such a good thing. Okay, it's going to put pressure right back on this 7,000 level again. Okay, so that is the ASX 200. How that looks a little bit indecisive at this stage. Okay, now lots to get through today, so I'm going to try and be as quick as I can. Okay, let's go through some stocks. Firstly, the ASX 200. I just want to talk to you about the portfolio. It is up 4 this week to 25. So I've got 22 stock picks of 167 covered, and there are 3 ETFs still in there of 21 covered. There is really no trend in the market at this stage, so that's why we've got so few stock picks. The 5 portfolios, because they're energizer portfolios, they focus on the stocks that are going up. The 5 stock is actually full again, and the 10 stock now has 6 out of 10. So that's the concentration. I concentrate my stock picks around those 5 stock portfolios and 10 stock portfolios, and that's what I do. That's the leverage part of it. So that doesn't look too bad. The sectors at the top are still energy and property. You know, because most of the stocks are so weak at the moment. Okay, so that's the ASX 200. So let's get into some stocks. The first cab off the rank I have for you, you can't see the name there, but now you can. It is Orica. Okay, it's been a pretty depressed stock for quite some time. We had one false start a few months ago, and we got out, and it's come back down and traded a new higher low here. So we're going to look at this. The clarity of evidence makes your decisions easy. The evidence is based on your trade plan, so you focus on your evidence. I'm not looking at anything else apart from what I can see here. Okay, so firstly I can see that I have a trend reversal pattern here. I've got a high off a downtrend. I've got to pull back to a higher low, and now we're pulling up to this trend reversal point, which is the high between these two lower peaks. Okay, sorry, the high between these two lows here. Okay, so we're getting there. We're almost there. Trend reversal off a kilo will be breaking through here. It's around about 1550, 1560. We can see the volume has, you know, has been selling here, no doubt. But there is a bit of bias toward me, like this little spike up last week. And I do notice there's a couple of other stocks like Incitec, Pivot, New Farm, in that explosive area. Not that Orica's totally there, but it's in that area that is attracting a bit of interest at the moment. So those other stocks I mentioned you may want to have a look at. And we can also see momentum turning positive here. So I've got a trend intensity rating in the neutral zone at the moment, but a price move above the 1560 level will certainly trigger a positive trend intensity rating there next week for Orica. So that is one for you to watch at the moment. It's had a lot of false starts, but this is a cycle low down here. The risk is probably pretty low at the moment. The cycle low was hit in 2009, it was hit again in 2016, and again here in 2021, and each time it is held. Sooner or later, we're going to see a rally. Maybe this will be the time. We'll wait and see. We looked at CBA last week. I'm going to look at it again because it's a very interesting stock at the moment. We know NAB has been going great guns and we like NAB, we're holding NAB. We can see ANZ, it did break down not long ago, it's getting some demand again, and CBA looks interesting because it has broken the high here, the old highs here. It's come back since the August high, and we've now seen this correction phase go through. It's got a good support down here, about 93, 94 bucks, and we're now seeing a bit of volume drive this price in towards this resistance at R1. So we are not there yet, but we are trying. And as I said before in the opening, is the uncertainty creating a bit of interest in the banks, and also a slight increase in interest rates, which is what they will like, so they can start fattening their margins a little bit. So we've got volume here, momentum has just turned positive, and we've just gone above the average. So trend intensity rating is -2, so we're neutral and we are waiting. Like I said before, being neutral is nice because you have cash and you're ready to pounce when you need to. Okay, so that's CBA, and it's also worth looking at NAB and ANZ. Westpac's a little bit of a different one. Okay, everyone keeps asking me, what's WiseTech doing? It's had some pretty big rallies over the last few years. And we had a big break here back in September 2021. It rallied on quite strongly, but it finally succumbed to the pressure from the NASDAQ, and it came down here back to support. So this is still in a long-term prevailing uptrend, I would think. I could probably draw a reasonable sort of uptrend line through these three lows. But holding this here, and we see a little bit of volume starting to appear here. I can just drive this up a little bit so you can see there's some reasonable fresh demand occurring here. This has come down a long way. It's still above zero, which to me is positive. So, and it's turning. So there are things happening here. Again, we've got this trend intensity rating of neutral. So these stocks are ones that we're looking at, ready to get onto if they start rallying again. So don't be afraid. Don't worry about the market. Don't worry about any fear you've got. This tells you what to do. That's what you do, okay? So WiseTech is an interesting one to me. It's rotating between about 60 and about $40 at the moment, okay? But looking okay, and we're not out of the woods. For those of you interested in property stocks, we've got a little one here for you today called Growth Point Properties. Now, it's now come back to its 2020 high pre-COVID. Okay, we're back here, we're banging on this door really hard, trying to get through. The good thing is here, we haven't seen this market. We saw a sell-off here, and support came into here pretty quickly, quite a few red bars, and support came in here, and we're rallying here onto quite good demand. So this is a very good sign of strength to me, this S1 holding, because normally with this sort of resistance, it's quite possible that this can come back all the way back to S2 around 250. It hasn't done that, hasn't shown a lot of weakness. The buyers are coming in reasonably early, so this is the level here, a new high above here. As the evidence builds, we wait for the outcome. It's neutral. Trend intensity rating is +2. It's not a buy yet, but the signals are there. If it goes through this level at R1 here. You want to check these levels, you need to go to Stockradar to have a look at what these levels are, okay? So that's Growth Point Properties, looking very interesting, and this isn't not an insignificant level. If it breaks through this level, there's a high probability of a good trend ensuing from that. Okay, so next one I've got is for you. Okay, I'm going to go down to the lower end for the moment. It's an iron stock, Champion Iron, small stock. Do we take on the risk? You know how I feel about small mining stocks and gold stocks. They are volatile, they are dangerous. If you want to play the game, be prepared. As I show you here, from the last rally here up around $7, we corrected 50% in 2 months, back to about $4. Was nearly 50% basically. So that's one that you've got to be really careful about. And we never know what's going to happen, so we've just got to be a bit careful. When a stock goes off and a trend breaks, we really should get out and just let it happen, especially in these stocks, because they can do so much damage to your portfolio. So we would have gone neutral on this point here. We're now waiting. We're neutral. Tendency rating is 0. Volume is good. Momentum is good. The averages are good. Everything is good in this one at the moment. Do we take on the risk of the break? Well, that's up to you. As I said before, one way of minimising your risk is cutting your exposure in half and widening your stop a bit if you want to play this game. So it's just a simple new high, and if it makes a new high, then we will add it to our stock picks. Okay, with the stop. Okay, so that's Champion Iron. I've got one more little stock for you to look at. Since it listed, Endeavour Group has been interesting. It has traded in a range of about sort of 620 up to 720. It just recently is rayed off the bottom of that range and it's gone straight to the top of the range. It's just, you can see these long bars here just saying the sellers are there. The sellers are there, which is sort of good in a way, because if it does break, that means all these guys are going to reverse their positions and become buyers, and that's when we get this market imbalance and drives a move higher. When you've got more buyers and sellers, the price must go up, and vice versa. It's all economics 101. Okay, so this is interesting because we have a bit of reasonable volume here without going crazy. It's above the average. Momentum has turned positive. Trend intensity rating of 3. So all the ones I'm showing you today are all neutral. And we talked about this neutrality before. We can jump onto these stocks when they give the signal. So it may or it may not give the signal, but Endeavour Group is certainly worth watching. And there are plenty of stocks coming on the board worth watching at the moment. So remember, follow-up analysis of all these stocks I'm showing you today is available on Stockradar's Trading Centre. Okay. Includes weekly updates on stock entries, exits, stops, reversals, and the trend intensity rating for every stock. Okay, so that's what we look at. Okay, so now I'm going to go to trading tactics and talk about our high conviction and what we sort of really want to know. Now the market hasn't been really trending since August, so we have continually reduced our exposure because there's no real market trend basis the ASX 200 and the stock pick count, which has come down from around 70, 75 in August down to around, got down to under 20, I think. It's now around 25. And so that all confirms this neutrality where we should be. It's like understanding about what sort of positioning you should have for the current market, and our positioning is reasonably neutral, okay? So we are in capital preservation mode unless uptrends are triggered, and I've shown you a whole lot today that may go through. So there you are. Keep an eye on those ones. Okay, now what I'm going to go through is, okay, conviction and belief. It's your choice what you want to do. You can have conviction in what you want to do and follow your trade plan, or else you can diversify and have a scattergun approach across market sectors and across market caps. And that's basically shooting and hoping. Basically, that's what I call it, shooting and hoping. If I get enough shots on the market, eventually I'm going to get one right. But the other thing is, there are also losers there. And unless you cut those losers, you're really going to go nowhere. So number one here, believe in your process. I'm going to talk a little bit about the basic premises of Stockradar, what drives it before, but believing in our process is what we do, and we don't diversify, we don't shoot and hope. Okay, we can diversify across asset classes like housing, property, bonds, things like that, but in the stock market, we go for what we want, and that's how we do that. Okay, so this comes from 3 beliefs, okay? One is having confidence in your stock pick process. Why have it unless you're going to use it, okay? We place higher bets on a single stock than a broader diversification portfolio allows. Our portfolios are reasonably small, so when we place a bet, we place a higher bet than we would if we had a big portfolio. We use equal allocation on our stocks, okay? So you can always do it differently, but that's what we do. So it increases the odds that capital will be directed to a big winner, such as Computershare, okay? Which has been a great winner. It's over 50% now, up. It's been a great stock. So for those with a 5-stock portfolio, you've got 150 of your capital in there. So that's been a nice runner for us. So allocating capital effectively is what I am about. Make it safe. A well-researched, systematic, price-based methodology matched with an appropriate risk governance is a very safe marriage. So you need to jump on your trends, but also listen to your stops. Protect your profits, keep them big. So the strategy also will not allow, once we've got a big profit like Computershare, it will not allow it to go away. We have our trailing stop following behind that says when it goes past there, we get back. So we never give back a trend. And we also limit our losses to a certain amount. So we're not going to carry these big drawdowns and watch the stock slide down the gurgle like maybe Champion. which went champion iron, which went down 50%. Okay, we won't allow that to happen because you don't know what's going to happen. So you just do it and get out of it. Okay, so you limit your losses and protect and run your profits. Okay, the Stockradar premise, okay, which probably some of you will have seen, but I'm going to go through it again because it's vital. There are when you're trading, there are big wins, small losses, big losses. We cut out big losses. By cutting out big losses, by being disciplined in what you do, we suddenly bias our trading results to the positive side of the ledger, because you can see with no big losses, we've got small wins, small losses, which will basically cancel themselves out, and that will leave us with big wins to generate our returns. Okay, so that's really the premise. The focus is to be fully exposed when markets are rising and protective of our capital when it's not. That's that simple. The Stockradar strategy, Stockradar's 2 entry setups, the trend reversal and new high, ensure we are always exposed to uptrends. So whether it's CBA or WiseTech or any of those stocks I showed you before, if they make a new high, I buy. Simple as that, because a new trend may develop. And as a trend trader, I cannot not be exposed to an uptrend. I must be. So trend reversals and new highs, make sure I get that exposure. Okay. So that's really what I'm about today. I've talked about conviction. I've talked about belief. I've talked about running your profits, protecting your losses. And at the moment, the market is at a little uncertain stage, so we pull back and be gentle, unless we're running our Energizer portfolios, which focus on those stocks that go up. Okay, so be realistic and have the right expectations so you can always move forward with confidence. Okay, confidence in what you do. The current market is testing us, so we need to maintain our poise and our behaviour throughout all market conditions. I always say, whether it's a bull market, bear market, sideways market, you always must be able to think clearly, have good perspective and behave in the same way. Okay, stay safe, watch your trends, heed your stops, and I'll see you all next week. Thank you.